Trading does not have to be complicated. In fact, one of the biggest mistakes I see traders make is adding more and more information to their charts. More indicators, more time frames, more entry signals, more strategies, and somehow instead of becoming more consistent, they become more confused. My approach is different. I mainly focus on 2 time frames, the 4-hour chart and the 1-hour chart. I do not need to drop to the 5-minute chart. I do not need to chase every small market movement. And I do not enter a trade simply because one candle pattern appears. What I want is alignment. I want the higher time frame to give me context. I want price to interact with an important area. I want to see what happens around liquidity, and then I want confirmation before I enter. In this video, I'm going to show you the simple framework I use to analyze the market and filter my trading opportunities. We are going to focus on 4 things. First, higher time frame context. Second, time frame alignment between the 4-hour and 1-hour charts. Third, liquidity. And fourth, confirmation through my engulfing candle or diamond pivot indicators. The important point is this: I am not using these indicators to predict the market. I use them to confirm what price is already showing me. That difference is extremely important. So let's go to the charts. Before I think about an entry, I start with the 4-hour chart. My first question is not where can I buy, and it is not where can I sell. My first question is, what is the market showing me? Is the market trending higher? Is it trending lower? Is it moving inside a range? Where are the important swing highs? Where are the important swing lows? Where is liquidity likely resting? And where is price currently positioned within the broader structure? This is where many traders make their first mistake. They start with the entry. I start with context. Because an entry signal without context can be dangerous. You can find a beautiful bullish engulfing candle inside a bearish environment. You can find a beautiful bearish signal while the broader market is still pushing higher. The signal may look perfect, but the location may be wrong. And for me, location matters, context matters, sequence matters. So, on the 4-hour chart, I begin by mapping the market. Let's imagine price is moving lower. We can see lower highs, we can see lower lows. Sellers are controlling the broader move. Now, does that mean I immediately press sell? No. This is where patience comes in. I want to know where the liquidity is. Because price does not always move in a straight line. Before continuing lower, the market may first move higher. It may trade above a recent swing high. It may trigger traders who are positioned too early. It may attract breakout buyers. It may reach into an area where liquidity is resting. And then the real question becomes, what happens after that? This is where I move from prediction to observation. I am not saying price must reverse here. I am saying if price takes liquidity here, what confirmation appears next? Now I move to the 1-hour chart, and this is my main confirmation time frame. I am looking for the 1-hour chart to start telling the same story as the 4-hour chart. This is what I call time frame alignment. If the 4-hour context is bearish but the 1-hour chart is still pushing strongly higher, I do not need to force a sell. I can wait. I want the market to show me that the lower time frame is beginning to align with the higher time frame idea. And one of the key things I watch is a liquidity sweep. For example, price may trade above a previous high. To many traders, this can look like a breakout. They see price moving above resistance and immediately think the market is going higher. But I do not automatically treat every break of a high as bullish. I watch what happens after the high is taken. Does price accept above that level? Does it continue strongly higher? Or does it reject? Does it move back below? Does bearish confirmation begin to appear? That reaction is important. Because the sweep itself is not my entry. Let me repeat that. A liquidity sweep alone is not enough for me. I still want confirmation. And this is where my engulfing candle indicator becomes useful. After liquidity has been taken, I watch the 1-hour chart. If a strong bearish engulfing candle appears in the right context, at the right location, after liquidity has been swept. That gets my attention. Why? Not because every engulfing candle is a trade, but because now I have a sequence. The 4-hour chart gave me broader context. Price moved into liquidity. Liquidity was taken. The market reacted. And now the 1-hour chart is giving me bearish confirmation. That is very different from randomly selling every bearish engulfing candle on the chart. The indicator is not making the decision for me. It is helping me identify confirmation inside a framework. Now let's talk about my diamond pivot indicator. The diamond pivot helps me identify meaningful swing points based on market structure. You may see a diamond form around a swing high or around a swing low. Again, I do not trade every diamond. That would completely miss the purpose of the tool. I ask, where did the diamond form? What happened before it formed? Was liquidity taken? Does it align with the 4-hour context? Is the 1-hour chart beginning to confirm the same direction? For example, imagine the 4-hour chart is bearish. Price pushes higher into a key area. It trades above a previous swing high. Liquidity is taken. Then price begins to reject. A bearish diamond pivot forms around that swing. Now I have another piece of information. And if I also see an engulfing confirmation, the setup becomes even more interesting. But I want to make something very clear. More confirmation does not mean certainty. There is no certainty in trading. What I am doing is building a case. I am asking whether multiple pieces of information are telling the same story. That is the core of my approach. Not prediction, not chasing, not reacting to one candle. Alignment, context, liquidity, confirmation. Now let's look at the opposite example. Imagine the 4-hour chart is bullish. Price has been making higher highs and higher lows, but then price pulls back. Many traders become afraid during the pullback. They think the trend is reversing. Some traders may even start selling because they see bearish candles. But I am watching the bigger picture. Where is the sell side liquidity? Is there a previous swing low? Is there a key low that traders are watching? Could price trade below that low before continuing higher? So I wait. Price moves lower. It trades below the previous swing low. Liquidity is taken. Now I watch the reaction. Again, I do not buy simply because the low was swept. I wait for confirmation. On the 1-hour chart, I may see a bullish engulfing candle, or I may see a bullish diamond pivot forming around the swing low. Now the sequence becomes interesting. The 4-hour context is bullish. Sell side liquidity has been taken. Price reacts. The 1-hour chart begins to confirm. And now the lower time frame is aligning with the higher time frame. This is the type of setup I am interested in. And notice what I am not doing. I am not dropping to the 5-minute chart trying to catch the exact bottom. I am not entering because of fear of missing out. I am not trying to be first. I am waiting for the market to show its hand. For my trading style, the 1-hour and 4-hour charts give me enough information. They help me reduce noise. They help me stay patient. And they help me focus on more meaningful market structure. Now, when I am reviewing a potential trade, I like to think through a simple checklist. First, what is the 4-hour context? Bullish, bearish, or unclear? Second, where is the liquidity? Above a recent high? Below a recent low? Around an important swing point? Third, has liquidity actually been taken, or am I entering too early because I expect it to happen? Fourth, what is the 1-hour chart showing me? Is it aligned with the 4-hour context, or is it still moving against my idea? Fifth, do I have confirmation? An engulfing candle? A diamond pivot? Or another clear reversal behavior that fits my trading plan? And finally, where is my risk invalidated? Because even if everything looks good, the trade can still lose. That is trading. The purpose of the framework is not to eliminate losses. The purpose is to help me avoid random decisions. And this is one of the biggest lessons I want you to take from this video. Your indicator should not replace your thinking. Your entry signal should not replace context, and a liquidity sweep should not automatically become a trade. Everything needs to work together. For me, the sequence is simple: 4-hour context, 1-hour alignment, liquidity event, confirmation. Then and only then do I consider execution. This is how I keep my trading structured, and this is why I believe traders often do not need more strategies. They need a clearer process, because when you have a process, you know what to look for, you know when to wait, you know when the market is unclear, and you know when a setup is beginning to align. That does not mean you will win every trade. You will not. I do not. No trader does. But you can become more selective. You can stop reacting to every candle, and you can start making decisions based on a repeatable framework. So, if there is one thing I want you to remember from this video, it is this: do not trade the signal alone. Trade the sequence. Context first, liquidity second, confirmation third, execution last. For me, that means understanding the 4-hour chart, waiting for the 1-hour chart to align, watching how price behaves around liquidity, and then using tools like my engulfing candle and diamond pivot indicators as confirmation. Not prediction, confirmation. If you found this video useful, subscribe to the channel. And if you want to learn more, you can join my free Fundex Trading Academy. The link is in the description. Inside the community, I share free trading education. Remember, you do not need to predict every move. You need a process, you need patience, and you need the discipline to wait for alignment. Master the market. Master yourself.